chat. Alrighty, guys, welcome to the upcoming week webinar. Let's break down this upcoming week, the upcoming week's economic events, the earnings, and a couple of plays for this week. So very excited for this upcoming week. Let's kind of break down everything to know. So here we have, let me see, this was the previous week's calendar, I believe, until Friday. Let me try to see the new one. I believe Madi just posted the new one. This is still the old one. So calendar day, I'm just going to pull up the calendar for this week and break down the events for you. And then we're going to break down some earnings. So this is for this week. I'm going to update this in the chat as well. Number one, Monday, housing market index 10 a.m. might be affecting us as traders. Housing starts and permits before the market open on Tuesday. Nothing really happening on Wednesday that we have to pay attention to. Thursday is going to be very important for us as traders, not only because it's data Thursday where premiums move fast and decay a lot. Before market opens, we have jobless claims, existing home sales at 10 a.m. as well, and then Fed balance sheet after the market closes. So all those things can affect us as traders. And then 15 minutes after market opens, PMI composite on Friday. So these events that I just covered right here, they are important because a lot of traders and investors and hedge funds, market makers are all paying attention to these events happening in the markets. And typically there is a lot of uncertainty around those events. So what might happen is there might be unnecessary volatility, there might be chop, or there might be low liquidity during those times. So what we like to do is, number one, be aware that those events are happening, right? And number two, we like to either reduce position size while trading during those events, right? So let's say Thursday between 8:30 and 10 a.m. we'd reduce position size, or we would just avoid trading during that time totally, because other people are also sitting out on their hands waiting to see what information comes out, and then they're going to make decisions based on that information. So we're going to stick to that, right? So for example, from Wednesday going to Thursday, I would not recommend swing trading anything on puts or calls because you're purely gambling on that. Jobless claims come out before the market opens on Thursday. That might really push the market either down a lot based on the numbers that come out, or the markets might rally. So if you swing trade calls or puts, this data is going to push the market up or down, and you're not going to be able to exit your position until the market opens at 9:30 a.m., right? So that is something you must pay attention to. With that being said, let's break down some earnings. We're now entering the earnings season again for the quarterly earnings for a lot of companies. We're starting to report earnings for the next couple of weeks. Last week, we had a bunch of banks report earnings. This week, we have a lot of names, full calendar to pretty much break down. In terms of earnings, we will have some plays from this earning calendar that we're paying attention to, but how I like to trade earnings and how I recommend you guys trade earnings is wait until the following day after the earnings report. So for example, if Netflix is reporting on Tuesday after close, we're going to want to trade Netflix on either Wednesday, Thursday, or Friday, right? Why we want to avoid trading earnings on Monday and Tuesday for, let's say, Netflix is because the premiums are going to be super jacked up. They're going to be really high because of implied volatility is going to be super high before earnings. And then we don't want to hold through earnings because it's purely gambling, and you don't want to gamble, especially if you don't have a cushion, right? We're here to trade and consistently take away money from the markets. If you want to gamble, you can take your money to the casino, right? But for this week, we have IBM on Monday, not a name I really like to trade, but I'm still going to be paying attention to how it reports. Tuesday after close, we have Netflix, United, Chipotle. Wednesday before open, Coca-Cola, Johnson & Johnson, Verizon. Let's see what else we have. Before open on Thursday, we have AT&T, American Airlines, Southwest Airlines, and Alaska Airlines, so a lot of airlines. Thursday after close, we have Intel, Snapchat, Twitter, and Capital One, right? So banks as well. Friday, we have American Express, not a name we really trade, Honeywell, so HON, reporting. So all these names are names that have potential earnings moves. In terms of price action, the ones that really offer good opportunities, I would say Netflix, Verizon, and Snapchat, Twitter. Those would be the names we really want to focus on. All the other ones either don't move as much intraday, or have very weird premiums with low liquidity. So I'd be sticking, to these 4 names right here for earning plays. Let's pull up TOS and let's break down the overall markets now, guys, and a couple of plays that I have for this week from the watch list that I posted in the chat. Let's start off with SPY and the whole story with SPY. So overall markets are trading lower the past couple of weeks after the Fed came out last week talking about inflation numbers. Inflation came in at 5.4% higher than expected, right? And people are no longer buying the story of quote unquote inflation being transitory and, Fed going to be helping us grow the economy. And we've heard the same story from Powell and everybody else for the past couple of months. And market is always forward looking. And obviously, people are no longer starting to buy this, story fundamentally. This is on the fundamental level. On the technical level, the uptrend I just drew here, this is the top channel and the bottom channel. So this right here, this red line is the top of the channel. This red line here is the bottom of the channel. We're still trading in an upward channel, long term, right? On the daily chart, we're still making higher highs, higher lows, right? And after this big rally, we're just pulling back. So right now we're currently here. We're still in the macro uptrend. There's still nothing to worry about fundamentally and technically for, the long term. If we do break, below 430, 425s and, get somewhere here, this is kind of the scary zone. If we come here and start testing this bottom of the channel and maybe even break down, this is where I'd start to get a lot of concerns about stocks, economy, and where we're heading, right? In terms of the lines that I have here for SPY, this is a 200 moving average, 50 moving average, and 20 one-day EMA, right? Those are typically the indicators you want to use for longer term charting, right? To understand the trends, directions of stocks. So typically 21 EMA acts as a level of support resistance for any stock, any security. SPY here as well, as you see. And there's a couple of things that can happen. I had a webinar, completely separate on that, on the 21-day moving average. Stocks typically either move towards the 21-day moving average, around the 21-day moving average, or away from the 21-day moving average. This is the mean price, and what typically happens is whenever we extend far from 21-day moving average, we tend to come back and retest it at some point or another. So this is what we see happening here, perfectly clear. So as you see, the blue line is the 21-day moving average, and here we broke through the 21-day moving average and started moving away from the 21-day moving average, right? We came back, we retested it as support, and we kept moving away. Now we're again retesting this 21-day moving average as support. Currently, we're still, making higher lows right here, and still in this, minor uptrend as well. So technically, we're still bullish on the macro perspective. On the micro perspective, if we go on a smaller time frame, we are turning, more so bearish. So long-term bullish, short-term very bearish, right? So we made an all-time high, trapped a lot of people here at 438, 437, so this whole zone, and then started making lower highs and lower lows. As you can see, we have all-time high, we have a lower high, we have another lower high, we have another lower high, and then we have the lower lows. So let's actually draw this as a separate trend on the hourly chart. We can just take a drawing tool and draw something like this, right, where we connect the tops and the bottoms, and now we have this sort of trend, right, forming as well on the downside. In terms of let's see, levels for this week, I'm confident that possibly we can see 425s reach and retest the top of this trend right here. We can see this zone right here get retested again if we do see some negative catalysts and some selling pressure kick in, right? So right now we're sort of trading in between the channel, but if things become bad, and as you know, stocks fall faster than they rise due to margin calls, stop losses, and overall fear and panic, and people locking in profits, right? We can definitely see a bigger drop down this week. I do think that it is reasonable for us to expect a retracement down to 425 on SPY, right? So those are kind of the levels to pay attention to. 430 is obviously going to be a psychological level to pay attention to on the downside tomorrow if we open, at or below 430. And then after that, 427.50, 425, and 422 are going to be your levels. So that is, what we're looking at for SPY currently. And if you look at ticker symbol ES, those are the S&P 500 futures. Those already opened, right? And as you can see, here's where we close on Friday, right here at 4 p.m. This is where we closed right over here. And what happened today, we pretty much, at 6 p.m. on Sunday, opened, retest this as level of resistance and went lower, right? So we're selling off right now in the futures. We're heading lower. We're at 43.06, so just above 430, trying to hold 430 right now. Bounced right at 430 on SPY on the S&P 500. So that is something important to kind of keep in mind as well. With that being said, let's cover a couple of stocks and a couple of great setups. There's definitely a lot of setups. So first thing I want you to pay attention to, if we look at a bigger time frame, right? There were stocks that sold off a lot last week. So, if you look at Amazon, you look at NVIDIA, you look at some other stocks, as you see, we had a massive sell-off. I know some of us capitalized on the puts and we, made money in downside. And then there's also setups that, are holding near highs and have not sold off as much yet, right? Even in different sectors. So a lot of tech stocks sold off. So let's say Amazon, NVIDIA, look at these massive pullbacks, right? And then if you look at something like, let's say Moderna, right? Moderna didn't sell off and just made all-time highs based on a positive catalyst and momentum. If you look at, PepsiCo, right? Making all-time highs. If you even look at something like DocuSign, right? It sold off, but it didn't sell off as much as Amazon or NVIDIA. Friday and Thursday were actually green days, right? If you look at something like, let's say, what else was green? Asana, right? Asana is still holding that uptrend, right? We have not sold off as much, so we had a bullish rally, and we haven't really, sold off as much to the 21-day moving average. And this is again where the 21-day EMA comes in. You see some stocks are, still holding way above the 21-day EMA. Those are stocks that I will refer to as relatively strong because they are relatively strong. And then there's stocks like Amazon, which are, either sitting and bouncing right on top of the 21-day moving average. And then there's stocks that are, like, let's say, what else was there? Like NVIDIA, which broke through completely through that 21-day moving average and closed below, right, the 21-day EMA. Those stocks are referred to for this week as relatively weak. As you see, the market condition is the same, but some stocks fall much more than others, and some are strong and some are relatively weak, right? If you look at some, tech names like even Google is relatively strong. Look how far Google is up and still trading way above that 21-day moving average, right? Opposed to something like NVIDIA, right? It's a tech stock, but it's relatively strong, right? As you see, we're here holding 25.30s right now on Google, and the 21-day EMA is 24.90. So we're still way above. So Google is relatively strong. With that being said, let's look at some names. So Amazon, we fell last week pretty hard. Honestly, this week, I do expect some more weakness if we see weakness in the market. Levels on the downside to pay attention to are going to be 35.70, 35.55, 35.24, and 35.12. I do believe that, again, if we see some weaker price action, we can definitely see another leg down here on Amazon to retest those previous levels, pre-breakout of all-time highs, 35.20s, 35.10s. This zone might be tested. So this is downside kind of in Amazon. On the upside, I wouldn't really consider touching it before we break 36.40 on Amazon, right? Next, let's break down Asana. Asana is interesting, relatively strong here. I want to see if we can get over 67.50 on the upside for this. I'm really not playing this on the downside. Just the way it held up with the market sell-off, it is showing that people are very bullish on this and don't want to let go of those shares or sell any of them, right? So over 67.60, over 68, we could possibly see this continue to 70 and then unbreakable time highs. This is mainly what I'm watching for Asana. Caterpillar, interesting name. Here we're, sort of forming an H pattern, kind of weak. This is something I'm trying to play on the downside. If we look on the yearly chart, on the daily chart, as you see, we are forming an H pattern where we have, like down, and then we have this H forming with, a double bottom sort of thing. So this has been quite weak, and this is an industrial stock in a different sector. It doesn't move as much as the other stocks, but there's definitely opportunity to scalp this on a downside. Under 207.50, we can see 205s get reached on this. So this is on watch tomorrow, and I'll follow through with you guys how things are moving pre-market. But honestly, if this sees more weakness, we can probably test this 200-day moving average at just about $203. Right now we're at 208, 207.90 is where we close. We can definitely see another $3 to $4 move down on the downside. Next, we have CRWD. This is a stock that made a bullish W pattern here that we had. It broke the neckline, then pushed all-time highs. Now we're kind of trying to pull back and retest some of the previous levels that we had. Also possibly forming a head and shoulders pattern or a bull flag, depending again on how the markets move. So if we're bullish on the markets, SPY bounces tomorrow, this could be a nice bounce play. We're sitting right on top of that 21-day moving average. But if we start breaking down and selling through, there is some downside to be seen to 247, to 245, 240, and then even 238, right? So again, every stock we're seeing right now, there is two possible scenarios to play this, just depending on what the market does overall. Again, I'm more bearish than bullish based on what I'm seeing right now, but that does not mean, I'm not biased to only be trading puts or only be trading calls. I'm laying out two possible scenarios of what may happen, and then I'm going to be utilizing those scenarios to take highest probability trades. So right now, again, we have sort of a bull flag forming. This can possibly, continue on the upside if we see a strong market, but we also do have a lot of weakness in this. So a lot of buyers have previously stepped in between this 246 and 248 zone in the past, and we bounced here on Thursday as well. Friday we didn't reach that, so Monday, if let's say we open tomorrow and flush to this 246 zone, I'm looking to possibly scalp this 245, 240, and 238 on the downside as well. Next, DocuSign, also a name that's relatively strong that might have some strength, bounced nicely off of that 21-day moving average. So this is a leader actually in the market. A lot of names are either, like NVIDIA is closing way below the 21-day moving average or just closed at the 21-day moving average. Something like DocuSign already made that fall right to 21-day EMA, and then buyers kicked in and pushed it through. Don't be fooled though. This might, still be bearish and turn into continuation on the downside, but right now the way it's looking kind of strong. But again, this just could be a bear flag, pull back at a continuation fall on DocuSign. DocuSign is an interesting one. It doesn't typically have a lot of liquidity on the contracts, but the contracts do pay well if you trade them. I would probably be trading, let's see which contracts have the best open interest for this week. If you're trading calls, I would probably on DocuSign be trading either the 285 or the 290 strike. Those seem to have the highest open interest and liquidity. On the downside, not a lot of stuff happening. If we break 280s and you want to scalp this quickly, I'd probably trade the 265s right here. They have the highest volume and open interest. And then if you have a bigger account, you can probably go at the money and scalp the 280 puts. So that is that for DocuSign. Again, levels on downside 275, 273 until we get at least under 275, 273. I'm not looking to play this on the downside. On the upside, I want to see this get over 283.50, 285 to possibly see continuation. Next, Facebook. This is probably one of my favorite setups right now for the week. This one is I'm going to be hawking tomorrow. I'm literally just going to be setting a lot of alerts, and this is my top one stock for tomorrow. The way the levels are forming out and the way price action is playing out right now is beautiful. Let me explain in more detail. So for the past 180 days, we have had this uptrend that has made higher highs, higher lows on every pullback, right? We made highs, lows, and we made this pretty much trend line, which you see here in the red. Long story short, we have higher highs, higher lows, all-time highs, and this sort of support trend line, right, which we have respected multiple times before. On Friday, we closed right below that trend line, right? So indicating that the support is no longer intact and we broke through it. As you can see, it wasn't a massive breakthrough, but still price action indicating that we're now making lower highs than lower lows, as you can clearly see by these wicks forming. Facebook is looking a little weak. Also on the 4-hour chart, we do have an H pattern forming. So tomorrow, I'm really watching that 340 level. If we get under 340, I'm looking to scalp this and possibly swing this. I think if we close under 340, we can see 335, 330 by end of week tomorrow on Facebook. So under 340, first target is 338.80, 337.70. 335, 333, and then 331. Obviously, that doesn't mean that the second Facebook breaks 340 is going to go down to 333, right? It might break down 340s with strength, go to 338, 80, consolidate here, go lower, pull back, trade within a range a little bit, and then bleed more, right? So you need to put together a plan. But overall, the way levels are setting up right now, it looks like we might eventually end up at around 335, 330 if we do break down on the downside. Next, Moderna. Moderna is not something I'm really looking to trade this week, but I'm still presenting this to you guys as a possible trade idea. And for you, you'd be able to sort of decide if you want to trade this or not. So Moderna getting added to the S&P 500 Friday, gapped up 10% on the day. So this is very, very strong. We did have a big gap here with the most volume on Moderna. Look at this volume bar that we're seeing here. A lot of new buyers entered the market on Moderna. We have a gap on the downside between 260 and 270 to fill in the downside. This is something to watch. We could possibly fill this gap this week. And then on the upside, there is just price discovery. So over 290, we can see another leg up, another squeeze. But Moderna is not a stock I'm really trying to trade this week, just because typically stocks move in phases. A stock, makes a move, consolidates, takes a break, and then it makes another move, right? And then it consolidates, trades sideways for a little bit, takes a break, and then makes another move. So just, judging based off of that, look at Moderna. Moderna last week made a move from 230 to 290 pretty much, made a $60 move on quite a big stock that is in the S&P 500 now. I would expect this to consolidate between 271 and 290 for maybe a week or so. It will trade within a range before either continuing another leg up or filling a gap back down on the downside. So that is something you have to pay attention on. Moderna, it already made a big move and just chasing it on the upside. Obviously stocks don't go up like this parabolically, or very rarely do. So technically waiting for a pullback. Netflix, it's here for a couple of reasons. They did have a bullish catalyst last week, I believe, announcing that they're expanding in the gaming industry, which is something interesting, where we had this gap up and then we had a sell the news event in a weak market, having this pullback. I'm not looking to trade Netflix until the day after earnings. So on Wednesday is where I'm gonna follow through with Netflix, depending on how we report earnings. So 720 is the earnings. 721, I will update you guys on Netflix play. Right now, I can't tell you, to pretty much have a setup on the upside or downside. It will all depend on what is said on the earnings call or earnings report and how they report earnings. Interesting one here on Nike. Nike is holding relatively strong. We did have a beat on earnings here. We gapped up massively. We gapped up like $20 or maybe even more, from 134 to 152. So just about a $20 gap, made all-time highs. And then we had a gap and go play and pretty much formed a nice uptrend, making another $10 move after that on the upside. With the way markets are looking right now, though, a lot of people, pretty much anybody who has owned Nike in its entire history, either here or here, everybody is up on their position right now because the stock is pretty much at all-time highs at 162. So when something like this starts pulling back, it tends to pull back much more than stocks that are trading within a range. This is exactly what we saw in NVIDIA, right? Why NVIDIA is having such a big drop? Well, that is because everybody is locking profits, cashing out, because in the entire history of NVIDIA, anybody who bought shares here or options or stocks, everybody is up, right? And now that we're seeing big pullbacks, all of those people are pretty much cashing out or getting margin calls or stop losses being hit below 800, 750, et cetera, et cetera. That's why it falls so hard. Just because it made, a big move, what comes up must come down. And if it goes up very aggressively, it is likely to come down much more aggressively as well. So that is kind of the idea I'm carrying it over into Nike, where we had an aggressive, come up here from 130 to 160. And right over here, as you see, we had this aggressive come up. We formed an uptrend on the 4-hour. Oops, we formed an uptrend. Give me 1 second. Can you guys see my screen? We made an uptrend here on the smaller time frames. It made higher highs, higher lows. Let me show you guys right here. And now we are seeing something similar to Facebook, where we have higher highs, higher lows, all-time highs here, and now we're no longer making all-time highs. The previous push, we couldn't make an all-time high here. We made a lower high, as you can see. We made a 162.73 all-time high. The high after that was around 162, so indicating that buyers are not as strong anymore. And now we're also making lower lows. And we just closed on Friday below that trend line. So Nike can possibly have a gap fill continuation down to the downside. It does have a gap to fill all the way to 146 on the downside. So if we look at the daily chart, we do have a big gap to fill on Nike. If markets are weak, start falling, we do have all of this area to fill to retest previous levels. Gaps are there, but they don't have to fill, but there's a higher probability now that we have a gap on the downside that it does fill. So Nike, lots of possibilities to trade this on the downside. This is a play I'm watching tomorrow, especially we'll see how this reacts tomorrow in the pre-market. So we'll keep you guys posted on that. NVIDIA is an interesting one, and let me explain why. So overall, looks bearish. Looks like, I would continue shorting this until 693s or somewhere around there. I'm actually developing an interesting play idea here on NVIDIA. I want to take a lotto call swing trade on this from the 19th. So from Monday going into Tuesday, I want to probably swing one or two calls on NVIDIA as a lotto play, just because, yes, we're in this massive downtrend. I think in NVIDIA, we came back a little bit too aggressive and we might see a bounce before a continuation lower. This is, again, what typically happens after a stock makes a big move. It takes a break and then it might continue down. But the main reason I'm taking that call idea, and again, I'm not sure if I will take it yet. It will depend on how we trade tomorrow and what the market unfolds, is we have a 4-to-1 split going into effect on NVIDIA on Tuesday. So what that means is right now NVIDIA is trading at 726. So let's say, Monday, NVIDIA is going to close at $720. Let's just estimate that. Tuesday, so this is Monday, NVIDIA is at 720. Tuesday, the stock is going to open at 4 times cheaper than that, but they're going to increase the number of shares. So Tuesday, whoops, that is a massive T. Tuesday, the stock is going to open at around $180, right? So a lot of people are going to see on Tuesday that NVIDIA went from 720 to 180, right? Don't be surprised if that happens. This is what most likely will happen. It will open below $200, around $200, 160, 180, around there. A lot of newbies, retail traders on Robinhood, everywhere, they are going to go crazy because they're going to say, oh, NVIDIA yesterday was 720. Today it's 180. It's at a massive discount. Let me buy it, right? And this might send the stock, up 5 or 10%, as we saw in names like Trade Desk, Tesla, Apple, when they had stock splits. It is giving a lot of buying pressure to those retail traders that are coming in, but giving the stock a lot of buying pressure because they think the stock is very discounted and they're going to buy it, right? So that is a possibility of what might happen on NVIDIA. And this is an interesting trade idea, right? So I will follow through with you guys in a chat on this trade idea and we'll develop it further as we see what develops tomorrow. But this is, again, something you might want to pay attention to and take into consideration. As you see here, Tuesday, we have this 4-to-1 split opening. And again, this might send the stock doing something like this before, continuing down. So that is kind of my idea going to NVIDIA. We'll see how this plays out. And again, if I do swing calls or swing something on NVIDIA this week, it's not going to be super big. It's probably going to be like 1, 2, 5 contracts, $1, 2, $5,000. It's not going to be, a big position size for me. With that being said, let's move on to the next one. PayPal, right now, relatively strong compared to all other names, still forming this sort of cup and handle bullish pattern. If markets are strong, I'm looking to possibly play continuation here on the upside. If markets are weak, I'm looking to possibly continue this on the downside. So on the downside, let me go on the hourly chart. On the downside, we do have room to keep falling here. So under 294, we can see 292.30s and then 290 on the downside on PayPal. If we do get over 298, we can possibly see 300 and then 304, 308 on PayPal if markets are strong tomorrow. So let's see how this one goes. Roku, as well as something similar to PayPal, we have this, cup and handle forming as well. Can possibly see two scenarios here, either a bullish scenario or a bearish scenario. Give me one second, guys. Had to sneeze. Sorry about that. So with Roku, we have a lot of levels that are, acting as a level of support, but are not really maintaining that support. So let's take a look at that same 21-day moving average, same sort of thing happening here on Roku, where we're making lower highs, lower lows on every candle, every drop, right? And we closed on Thursday and Friday below the 21-day moving average. My bias on this is definitely bearish. I do think if we open tomorrow below 397, we can head to 392, 390, 385, and 380 and retest 380s. And this is similar to, again, NVIDIA and Nike. What comes up aggressively very fast, right, must come down, more aggressively than something else as well. So keep that in mind for Roku. Shopify, relatively strong here, closed right below the 21-day moving average on the daily. Looking for this to continue on the downside if we see weakness in the market. So on the downside levels, we have under 1430, looking to play Shopify down to 1420, 1400, and then 1375. We have a gap fill to 1375 on Shopify. Snapchat, no real idea of how I want to play this yet. Just have a couple of levels here set up on Snapchat. This is similar to Netflix. They do have earnings on the 22nd. So Thursday, possibly looking to play Snapchat, depending on what happens with earnings. If they report earnings and, we have a setup on upside, I might scalp it on Thursday or Friday, or, scalp it on the downside on Thursday and Friday, again, depending on what is said on the earnings call. I'm not going to touch it until we have earnings report. And lastly, Tesla. Tesla had news, I believe, Friday or Saturday over the weekend that they're introducing a subscription for the self-driving package of the Teslas. Now it's $199 a month version. So for them, it's an extra source of revenue, which is good. And for a lot of people, it's more attractive to now get the self-driving, because I believe previously it was like 10 grand to have that package. You just have to make a one payment of 10 grand. Now it's $199 a month for it. So for a lot of people, they might see this as an incentive and go buy this, or purchase a Tesla car, because previously they thought that 10K is too expensive, but now that it's $199 a month, they can probably afford it. So in terms of the setup on Tesla, $700 level on the upside is definitely huge. We might see a run up in earnings. We have earnings the week after, not this week, week after. We might see a run up in earnings and a blow through this resistance, after earnings. But who knows what happens on earnings? Be careful trading this week, as premiums are going to be a little bit more jacked up. But on the upside, again, the zone between 688 and 698 is going to be crucial. Crucial resistance that we have to pay attention to. If we can get over that, we might see some nice increased buying pressure on the intraday aspect. Let's see, we have some levels on the upside, including 657, 655, 670, and then 682. Those are going to be your upside levels to watch out for. On the downside, we have 637, 635, 630, and 628 will be levels you really want to pay attention to, right? Let me add the 630 level right here real quick as well. There we go. So yeah, guys, that would be it for this week's breakdown. Super excited to trade with you on Voice tomorrow. I'm going to be on Voice around 9:20, 9:25 a.m. tomorrow, breaking down the names, putting together a plan, and I will see you guys then. If you have any questions before then, feel free to let me know in the chat. But other than that, hope you have a great rest of Sunday, and I'll see you guys tomorrow.